Top of the morning to you, and welcome to our newest episode of Capital Markets Quickie from MVP Mind Value Partners. Despite the beer illness that has killed more than 300,000 people in the United States alone and put millions out of work, the stock market just won't quit and is now tipping into outright euphoria. Institutional investors, for example, who have been bullish for much of 2020 are finding new causes for confidence, especially due to the Federal Reserve's continued attempts to keep markets stable and interest rates low. Even private investors have piled into the market this year since the March lows, and they are trading stocks at a pace not seen in over a decade with a level of confidence that is outright frightening. I guess you can say that right now the stock market is clearly foaming at the mouth. My name is Endrit Cela, coming at you from Frankfurt, Germany, Europe's financial hub and home to the ECB. Let's take a closer look at what's moving the markets. The S&P 500 is up nearly 15% for the year, and the Nasdaq 100 just doesn't seem to care about valuations. By some measures of stock valuation, the market is nearing levels last seen in 2000, the year the dot-com bubble began to burst. Initial public offerings, that's when companies issue new shares to the public, are having their busiest year in 2 decades. And the funny thing is that most of these companies aren't even profitable. But who cares? The stock market certainly doesn't seem to care because everyone is caught up on tomorrow's, next week's, and next month's performance. However, very few analysts expect a replay of the dot-com bust that began in 2000. The collapse of the stock market at the turn of the century eventually vaporized about 40% of the market's value, or more than $8 trillion in stock market wealth. And more importantly, it helped crush consumer confidence as the country slipped into recession in early 2001, which was followed by dramatic events later in 2001. And it goes without saying that 2020 caught us all by surprise, but I can't help but get the feeling that everyone is indifferent to the big picture and is entirely focusing on the stock market alone. Now, don't get me wrong, I am an investor myself and I work for a renowned investment firm in Frankfurt with a focus on value stocks. And well, as value investors, we're pretty picky when it comes to the price that we pay to own a piece of a business. But we are seeing that kind of craziness that I don't think has been in existence since the internet bubble. And as Mark Twain said, history doesn't repeat itself, but it often rhymes. So what rhymes with 2001? Well, let me call my buddy Eminem and see if he can help me out. Okay, jokes aside, but there are many good reasons for the stock market rally to go on. The Electoral College voted on December 14th that Joe Biden will be the next president of the United States. And thanks to Pfizer and BioNTech, a nationwide push against the beer illness has begun, signaling the start of an eventual return to normal. On top of all this, we have a central bank that is very accommodating with their policies so that the economy can get back on track ASAP. After all, we had 803,000 jobless claims last week, and that means we're still very far away from normal. Nevertheless, many analysts, investors, and traders are skeptical. The good news, while promising, is hardly enough to justify the momentum building in stocks, but they also see no underlying reason for it to stop anytime soon. Well, maybe party like it's 1999 rhymes with 2001. Or maybe we shouldn't underestimate the appetite of individual investors to make money at all costs and at all risks. That could keep the stock market going for quite some time. I guess only time will tell. In the meantime, it is important to keep a well-diversified portfolio, so please don't put all of your eggs in one basket. Before we come to an end, I'd like to announce that starting next year, Capital Markets Quickie will be moving to a different rhythm. What does that mean? Well, I will be posting monthly podcasts instead of weekly podcasts due to some interesting new projects that I will be taking on, and I will keep you posted on that. So that, ladies and gentlemen, concludes today's Capital Markets Quickie. To all of you listening from every corner of the globe, I wish you all the best and stay tuned for our January Capital Markets Quickie on Sunday, January the 31st.